Recently, we have been reporting fairly bullish. Let's look at the narratives over here. We have the Trump-Xi meeting, and you can see some of the world leaders are going to be attending this particular Friday to set some expectations with America and China relationships. That could be in better trade agreements, concessions for manufacturing, and so many other things. We have Kevin Warsh, who's coming in as the new Fed chair, and if everything progresses well, we could be looking at better rate cuts or better monetary policy for America. Even with crypto, we have the Clarity Act, which is set for markup this week, and that would provide amazing regulatory clarity for crypto and assets and possibly a mass risk on environment for that to grow. But here's the thing though, short term, I'm actually not that bullish. I'm actually leaning a little bit bearish, and here's why. If you look at the SPX right over here, on the RSI, we actually have been overbought consistently for many days now. The headline CPI actually came in. Brent crude is now working its way to making higher highs again. And it might actually even break through the RSI this time, considering we're not in such overbought conditions. Bitcoin, even though it's broken out of this ascending range, is now forming an ascending wedge while battling the 200-day MA and could be ranging downwards from here and could be looking like a little bit of a weak structure. All of this and many things that we're going to discuss in this particular video to give you clarity on how you should operate in the markets for the near short term to medium term. Hello, everyone, and welcome to Strategic Markets, your place for technical and fundamental analysis all at once. And into our midweek session, we have to start off with this hilarious picture. Now, I was watching Altcoin Daily's channel today, and they just posted this, and I'm like, if this actually ever happened in real life, this would be a sight to behold. And this is exactly why we have AI, guys, for fun moments like this. But if we do take a serious note on this particular matter, we have some of the greatest CEOs of America traveling with President Trump. It actually, I just saw on an X post, Elon Musk had posted that he's on Air Force One with Trump and all these CEOs going straight to China for better discussions. And I thought to myself, hold on a second. Could America have actually started this war with Iran to increase tensions and have better negotiation power, therefore being able to go to this Trump-Xi meeting and be able to come with all these strong, powerful people and negotiate better terms and have better relations? So I did what every normal person would do. I ran this past AI and asked it for its thoughts. And AI kind of said there is a plausible version of my theory where we have this Iran Hormuz crisis. Trump uses this as leverage. China needs the stability due to the energy dependence. They push for better trade terms, manufacturing concessions, geopolitical cooperation. And then, if a negotiated settlement actually goes through, he might actually stop the blockade on oil. Oil starts falling sharply, inflation cools, Fed gains room to cut later, global risk assets rally. And this all sounds great on paper, and I'd be really happy. But a couple of concerns that I do want to run you past. First of all, at the end of the day, the Strait issue doesn't just appear to be in American control. Iran is there too. And Iran might actually say, hey, like, we might just not let oil through. And they might just let it through for China, which could be great for all things and relations, but they're still there and they still have firepower affecting this particular area. And high oil prices generally do hurt Trump and his political aspects, so we can't deny that. The Fed is independent to decisions. So if CPI comes down, then yes, at the end of the day, we could have the Fed could cut rates. Until that doesn't happen, we can't guarantee anything. And China long term may not actually trust US because of all these games and tactics US might actually play to get China to negotiate better. Moving forward, they could actually still focus on the BRICS system, alternative settlement rails, energy diversification, and so much more on the yuan dominance there. So there are a couple of factors in play, but 100% this is a bit of a theory that you have to think because Trump is a businessman at first. And then you also see Kevin Wu. He's been confirmed as the governor of the Fed, which is great. Now, the chairman of the Fed, those votes are going to advance most likely in the next couple of or likely by tomorrow. So that's going to be really interesting news to see how we go. But then you've got a pro-Fed chair and all the prior narratives you've been discussing in earlier videos. If you haven't watched our earlier video regarding altcoin season and the structures that are building out, medium to long term, they're actually looking very good. But short term, I'm a little bit bearish, guys. And let me make my point to you. First of all, we just had the CPI data come in, and that came in a fair bit high. It was 3.8% actual, with our core CPI also being at 2.8%. These are not great numbers. And then at the same time, when you look at something like oil recently has again started making its move up, and it actually may go to set another higher high. Then on the RSI, we might actually break through over here of this downtrend that we've been forming and possibly move up. Now, do we break this green upper trend line? I can't say with more certainty, but it's looking like oil is building its strength back up. When you look at SPX, on the other hand, the S&P 500, we have been overbought consistently for many days now. So to be honest, this is looking like it's due for a correction, or at least for a move sideways, whatever the case might be. So I can't always just be sitting over here and say, this is looking at bullish, we are heavily bullish, because there are some signals in the market that are now starting to show that short term, that may not be the case. Another aspect I was looking at is this SPX comparison relative to AI stocks that are currently trading and without AI stocks. And you can see over here, without AI, we actually are not setting any all-time highs at all in the SPX. It's just the AI trade that's really getting us there. Now, I'm not saying this bubble, if we are in a bubble, it just ends over here. I personally think just relevant to the 2008 GFC, Great Financial Crisis, we still could have a very big bubble. The markets can say unreasonable till the extent you can stay reasonable. That's a true fact. But at least for a little bit of a short term, considering these aspects are overextending the markets and some of the signals that I'm seeing, I am being a little bit more cautious as to how I position myself right now in the market. Another interesting aspect from a risk on perspective, I've been sitting over here for days on end saying I'm pretty happy that this ascending range that we have within the red and blue sections, we have broken out of it and we are testing above it, which is great. But then I saw this other pattern, which I've drawn with these red lines over here. We're in an ascending wedge. Now, if you do your research on an ascending wedge pattern, it is generally break down at about a 60% chance. And considering the other things that I've pointed out to you guys, right now, Bitcoin to me can look a little bit bearish, especially if you add on the liquidation heat map to it. Recently, it's been showing a lot of liquidity on the downside as compared to the upside. So I'm very open to the aspect of Clarity Act markup going through, us touching 84K, maybe even 85K. But then all this liquidity downstairs, if the Trump-Xi meeting does not really deliver on things, I am seeing a bit of downside over here, guys. And I think you should know this just for the benefit of how you handle yourselves. So the Clarity Act is there. We've talked about this. This is the 309 pages were released today, and a lot of discussion has been happening. And although midterm, this is really good for the market. When I see another risk asset such as Ethereum, right now Ethereum on this, bull flag pattern is to the T breaking down and retesting this lower support line before, I don't know, possibly moving its way down. Now, the end of the day is not here, so it could actually come back within this particular range, be a little bit of a fake out, and possibly make its way up. A lot of people, especially on Twitter, are fairly bullish on Ethereum. But here's the interesting thing. I'm not asking you to be bullish, or I'm not asking you to be bearish. Even though I'm short-term bearish, I'm actually just, in this case, choosing to stay out of the markets. I'm not opening any shorts over here. I'm not selling anything over here, particularly if it goes down. I'm actually looking to accumulate because medium term to long term, I'm holding my bullish thesis. I still believe we are risk on. And over the many prior videos that we have, our last video discussing things such as copper versus gold, or the ISM manufacturing index, or, altcoin strength, I think they do still hold some relative thesis. But right now, for the short term, with so many news events in the air, Clarity Act, the Trump-Xi meeting, and Kevin Warsh going into Fed chair, markets can be really volatile. And this is just one of those instances where I really can't put my finger on it. And that is why I'm just going to be choosing to be out of this market. But let's have a little bit of a technical look from Steve's side and see what he has to say on this.
Well, well, well. Now, that's a very, very interesting insights there, mate. Thank you very much for that. And it's really, really fascinating how you're bringing everything together there with all of those different discussions and just the general synopsis of the slightly bearish kind of aspects. I'm going to start off with looking at the Qs. That's in terms of the technology-laden ETF overall. You can see how parabolic this is. That's the most striking aspect in relation to the whole aspect of this particular index. All the way from the beginning of April, it really has just shot right up and really hasn't even taken a breath in terms of coming back down in any way, shape, or form. It's just straddled along that 8-day EMA all the way through. That's that yellow line right there. Even the lagging indicator, higher highs, higher lows all the way through. There really just has not been a pause any of the way through there. That Tenkan Sen on the Ichimoku curve all the way through, especially after it actually cut through the baseline. You can see the crossover there. It just has not stopped. And there has been a recent respect of it there, so it's not really overextended right now as we speak. However, it's still making its way, like after today, you can see it's about to actually jump out of the gate even right now as we speak with today's trade. When that actually starts up in about an hour's time, it's going to actually start making its way upwards again to form a new swing up on the daily chart. So we can really see that it's just going to keep on making its way, and then that will be considered to be overextended yet again. Like I mentioned on the weekend, technology is the only sector at this point in time, take it from the AI boom aspect like we discussed on the weekend as well, all of those kind of aspects. This is the situation that's going on with technology being the only sector out of the 11 sectors in the US market that is actually leading the charge and moving upwards. Nothing else. We can't really have a market overall that is on its way, leading the charge and going headstrong and going nuts. That in itself comprises about 30% of the SPY, of the S&P, and that's the reason why that's also going up well above all the moving averages overall. When you take a look at, say, the Dow Jones, though, comprising the top 30 stocks in the United States market, that hasn't been reaching all-time highs. However, in saying that, that actually is breaking out above the Ichimoku cloud as well, and actually is above all the moving averages, even though it's not breaking through to all-time highs. The Russell, doing fairly well, has reached all-time highs over the past week, but is struggling compared to, in terms of on a relative basis, the S&P and the Qs. Now you might be saying, okay, well, hang on, why are you highlighting and harping on this, Steve? Well, the truth behind that is the Russell overall, being the small caps, is more prone to certain areas of the market in relation to sensitivities. Those particular sensitivities that you need to really keep an eye on and really keep thinking about are things like bonds and interest rates, for one, but also its interdependence on things like the cryptocurrencies as well, based on all of those kind of aspects. Let's take a look at each of those in turn. Now, Yash has done a great job in terms of taking a look at the cryptocurrencies. I'm going to take a look at the other aspect in relation to the bonds market. Now, this has had some very, very major implications, especially over the last 24 hours. You may have read some headlines, especially in terms of the UK. There's a lot of pressure at the moment on the UK Prime Minister in terms of Keir Starmer. He's having a leadership challenge right now, and in response to that, a lot of people are not having a lot of favour towards the UK government in relation to their UK bonds. That's put a lot of pressure on the UK bonds. A lot of people have been selling them off. It appears as though a contagion effect might be coming into play in relation to the US bonds as well. And you can see that coming into play in terms of the way that the US bonds went down about 2/3% in last night's trade. You might be thinking, oh, 2/3%, Steve, that's not much. Trust me, when it comes to the bonds market, that's actually quite a substantial move. And you can see how substantial that is in terms of actually going out of this range that we've been talking about for quite some time, in terms of the range between the prior support that was actually over here, that's actually been acting as a resistance area for quite some time in terms of that level from January, and also the September lows. It was actually testing the September low for quite some time over the last few weeks. It broke that support in terms of that September low only just over yesterday's trade, and is actually considering actually even breaking through these particular lows that have been formed in recent times over the last week. So we could actually be seeing even further lows forming if we actually have even more favour being run out of the bonds market in the short term. So really keep an eye on this. Why is this important though? Well, the importance of this is that bonds are inversely related to interest rates. And if we take a look at the interest rate aspect, especially in the long-term interest rates, this is the real concern. The fact that if this keeps on going up, this is going to put a lot of pressure on interest rates overall. Now, you're probably looking at this and then going, now we see what the problem is. If interest rates keep on going up, this is going to start putting pressure on
The
areas.
Russell.
You got it now, mate. It's going to put pressure on the Russell in particular. Why does it put pressure on the Russell? The Russell, the small caps, they do a lot of borrowing in order to keep their businesses running. More pressure in terms of borrowing means it costs them more in terms of their running expenses overall. And if that puts pressure on the Russell, what happens overall? Pressure on the markets overall, also pressure in terms of their interdependencies on the crypto market. That could also be a lot of a problem in general. Now, as Yash really described very, very nicely, the crypto market has been struggling a little bit in recent times. Why in particular? We've been discussing this over the last few videos. Go back and have a look if you don't believe us. In general, we've actually been having a lot of problems in terms of the 200-day moving average when it comes to Bitcoin. That's been one aspect, and only just one aspect. It's now having struggled against the short-term moving averages there as well. These short-term moving averages, as you can see, they're starting to turn downwards, and we're actually starting to struggle in terms of the unit prices against those short-term moving averages. So, what's that going to cause some problems? Well, it could if we continually keep bashing our heads against that 200-day moving average, which is still actually turning downwards as well. So there's a problem there. We're actually now starting to have a bit of a problem against the Tenkan Sen trend line as well, as you can see here on the left-hand side. And if we actually start forming lower highs on the Ichimoku lagging indicator, that could also be another problem as well. But, this is a really, really big but here, is the mere fact of Ethereum being the big dragging anchor in relation to all of this. And you can really see that in relation to this chart here. Like we were speaking about on the weekend, this is that whack-a-mole kind of situation where it keeps on hitting its head, bonk, 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 so many times. Overall, it really cannot get past this resistance area here at around about 2,350, 2,340. And we've been talking about this for the last few videos as well. So it's really struggling there, and also struggling against the short-term moving averages now, which are also turning downwards. On top of that, take a look at this Ichimoku curve here with the lagging indicator. That's actually now gone beneath all the price action and also beneath the Tenkan Sen being that blue line there. Generally indications for negative trends forming. So there's a little bit of an issue there. Should we also break beneath the cloud, that's even further indication for further negative price movement. So some big issues that could be potentially occurring there as well. We were also talking about the banking sector as well over the weekend too, in terms of further weakness going on there in relation to things too. And that's really starting to follow through even further. We're actually saying basically keep an eye on the 100-day moving average, which is currently being tested there as well. And on top of that, whether or not what we were saying on the weekend is just coming to fruition, whether it had any impact in relation to our own budget that happened here over in Australia as well. But look at that chart as an absolute schmozzle in relation to our banking sector down here in Australia. Huge, huge impact that happened here in terms of as soon as it actually went straight through all these moving averages. Today, our own banking sector, compared to all of the other sectors here in Australia, this was our leading sector of absolute total devastation in terms of down 4% in just today's trade overall. And even WGMI, which we were talking about over the weekend, is just basically just sitting along and just going and not really doing all that much as well too. Now, if we take a look at some of the other factors that are going on, let's have a look at Brent crude quickly as well. Yash covered this very, very nicely, and I tend to agree that we're more than likely about to head upwards again with Brent crude, probably to test 117 level again to see how things are going there. Why, might you ask? Well, take a look. We're actually above the short-term moving averages yet again. And on top of that as well, the lagging indicator has just broken through the price action that's sitting right there as well. And that generally tends to indicate positive movement in the upward direction that's going on there, especially as we're actually starting to break up above that Tenkan Sen area there as well. So that's actually looking more of a positive bias more than anything else there too. And USO is looking pretty stable at this point in time, not really doing much in terms of going up or down at this stage. But as you can see, it actually leaped up yesterday above these short-term moving averages. So that's covered pretty much everything there in the grand scheme of things. Volatility-wise, not really changing all that much. It has actually gone up over the last couple of days compared to where it was over the weekend. And the dollar has actually started increasing again coming back up above the 100-day moving average overall there as well. Gold, just finishing up quickly overall more than anything else. Gold has done literally nothing since the weekend when we were actually discussing it. But take a look at this next chart that I'm going to bring up for you. That's silver. How much of a difference even just a couple of days makes on a comparative basis. But we've been talking about silver over the last couple of videos in terms of its relative strength compared to gold. And you can really see how that's kicked in, especially over the last few videos. And silver has definitely taken the mantle in relation to relative strength compared to gold. So as you can see, there are a lot of mechanics going on right now in terms of lots of change happening in terms of the markets overall. So yes, Yash, I'm in agreement with you that at this point in time, probably best to really start reducing position sizing if you haven't already in relation to quite a lot of aspects in relation to the market right now. There is a lot of things happening and a lot of uncertainty. You obviously with crypto, you've got the Clarity Act that's coming up there. We don't know whether it's going to be a buy the rumor, sell the news kind of aspect overall there. There's a lot of things going on with Brent right now in terms of Brent crude. That can have an impact in terms of the markets. And in terms of especially the volatility that's going on about to potentially start once again, as you can see from the VIX even there too, there can be a lot of things going on in terms of the interplay between the Russell, the interest rates, and everything else that's going on there as well too. So if you haven't got a good tolerance in terms of risk and everything there as well, cut that position sizing down, keep an eye on what's going on with your levels, and make sure you're really keeping an eye on your risk overall there, just to keep yourself protected if you're unsure of exactly what's going on there. With that, mate, I hand it right back over to you.
I think you've summed it up pretty well there, Steve. One other thing I'll just add is the Trump-Xi meeting that's going to go ahead. All these events, guys, are sparking, in my opinion, huge volatility in the near future. And it's just something that I can't deduce to the upside or downside. I'm leaning a little bit bearish, but I could always be proven wrong. And in these kind of situations, I just generally like to stay out of the market and just see how I go and hold my general bias. So with that being said, stay safe. If you made it up till now, please drop us a like. For today's comment, let's go for the word Kevin Warsh. Put that in the comment there. We love it. Mark, I appreciate your support. Honestly, every consistent week, if we get people to drop a comment, we're going to keep naming people until we get more than 5. That would be great. But until then, thank you, Mark. And thank you for anyone and everyone who is engaging with us and helping us grow. We truly appreciate you. And if you are on that journey with us, drop us a subscribe as well. That would be great. Otherwise, thank you so much. We will see you on the next one.
What'd you say?